On to South Africa now, which has cut its inflation target to 3%. This is the first change in over 2 decades. The finance minister says the move is meant to bring lasting price stability and build investor trust. But with slower growth and higher debt ahead, can this shift really pay off is the question. The government's new target sets a 3% goal with a 1% tolerance band, replacing the old 3 to 6% range. It's part of a broader strategy to cut inflation, ease the borrowing costs, and strengthen growth over time. Now, announcing the change in his medium-term budget statement to lawmakers, the finance minister basically said, I'm quoting, the new target will anchor inflation at permanently lower levels. This will reduce the cost of living and borrowing costs for households, businesses, and government, supporting higher long-term growth and job creation, quote unquote. This comes when central bank governor had called for a 3% target back in July. After initial tensions, both sides are now aligned and markets have reacted strongly. The rand has gained, stocks are up, 10-year bond yields have fallen about 1 percentage point. Lower inflation also means lower nominal growth and less revenue. Treasury official saying that revenue will be about $992 million lower by 2027 to 28. Debt is still seen peaking in 2025 to 26. But at 77.9% of the GDP, which is slightly above May's 77%. Meanwhile, the GDP growth is forecast at 1.2% this year, rising to 2% by 2028. The Treasury plans to finalize a fiscal anchor policy by 2026. South Africa recorded a primary surplus last year, its first in decades. To keep that momentum, the government will use about $1.7 billion from its gold and FX reserve fund in 2026 to 27. The fund, lifted by strong gold prices, was first used in 2024 to reduce debt. In fact, the tax revenue is running ahead of plan, is up by 19.7 billion rand from May forecast. The borrowing requirement has been cut to 568 billion rand. 568 billion rand, about $31 billion through March 2026. Stronger numbers have fueled talks of a possible credit rating upgrade as well.